So our discussion is really focused on principal officers. And we all know as pension funds how important principal officers in our lives. They are the CEO in many ways of pension funds, and we rely on them to execute the decisions that we as board of pension funds make. So principal officers are very, very important. The interesting thing is I've never really thought about the challenges they face in managing pension funds. I'm always thinking about the challenges we as Board of Management of Trustees face, not what principal officers face. So it will be an interesting discussion to have so that we can understand what the challenges are, and also to understand how audit committees can play a role in terms of making the jobs of principal officers easier. Now, I have two very interesting people. I know we're supposed to have a bigger panel, but hopefully this leaves us more room to have a bigger engagement with the audience on the issue. But I have one principal officer, Omar Giri. I call him an activist. If you know Omar Giri, whatever is on his mind, he will let you know. So I'm very interested to hear what his views are going to be during this panel discussion. He's a principal officer of the Metal Industries Pension Fund. And then I have Mr. Mark de Klerk. He's an independent consultant right now, but for Mark, I've known for years. He's been a principal officer on a few significant funds, including the Anglo-American Platinum Pension Fund. Okay, so my first question is going to be very basic, and I'm going to also encourage from the audience that the questions keep coming as well. My very first question is, what are your challenges as principal officers on pension funds? What are your challenges? And I'm going to start with Omar.
Sure. First of all, thank you very much for inviting me. When I was invited, the first thing I said was, please don't let me talk. Because you're going to be sorry if I start talking. Because all the conferences, everybody asks me, why don't you bring your trustees to these conferences? If our trustees want to come, they do come. And the reason why they don't come, and if they do come, and I ask them, what did you benefit from these conferences? They say nothing. Because every conference is selling.
Every conference is?
They're selling products. There's no trustees education. You don't find 2 or 3 big trustees sitting here and discussing issues, and then they go away from here, and then they decide to implement the best practices they've learned, what other trustees or other funds have been doing. And it goes on after conference after conference. Everybody sees it and it's nice. It's a nice outing and a function at the end of the day and so on. Unfortunately, I don't think it's a function for this one. But the biggest challenges, the biggest challenge I face is, I keep on talking about it, but nobody takes note, is service providers. Service providers is the biggest headache. They try to sell you almost anything, and the poor trustees are just caught in between the service providers and the board, because service providers are not controlled. They influence trustees most of the time, and my biggest challenge is these service providers who, I don't want to use wrong words here, but try to influence trustees to make bad decisions.
So let me just pick up on that point. So you're saying the biggest challenge is service providers. There's a part of me that says we wouldn't know the services that they offer unless they sold to trustees. So what are you talking about? You're talking about balance. Because there is a need to engage and there's a need to understand what is in the market so that you can make a decision about what would be the appropriate solutions from the service providers to have in your fund. No, so what is the distinction you're making?
I agree. I agree with you 100%. I think service providers should have a forum, and there's all these forums. They must have these conferences and invite trustees and sell their products. It's clear that we know this is a service provider forum, and they're selling products. They call it a trustees forum, and they come and sell products. And they see trustees are being educated. And there's no forum where trustees can get together in a forum where they can discuss their issues and then go back and then implement best practices that they can achieve, that they find that other funds are doing. Maybe the point I'm trying to drive through is that whenever the funds decide to embark on appointing service providers, and you have a board of trustees, all the trustees are influenced in some way or other, and linked to some service provider or other. And that is a big challenge for me. Usually the right decisions get taken, but after many hours and hours of discussions and meetings, which I think is fruitless, because why we could have made a decision much, much quicker if most of these service providers was not involved.
Before I move on to Mike,
there's another one I want to talk about service provider. For example, today in this industry in South Africa, you can quickly see most of the consultants, they say they're consultants, you appoint them. And when you appoint them, you find that they are not only consultants, they're also asset managers. So here you're an asset manager, you want to get into the fund. The consultant himself is an asset manager. How are you going to get in? And he's going to keep those trustees to keep you out. Those are the conflicts that I have, and those are the biggest challenges. And once that consultant is in, it's difficult to get him out. It's not easy. The board must fire him.
But I think you're picking up on something that's very important, Omar, and I think the issue is around conflicts of interest and managing conflicts of interest. So are you choosing service providers simply because they are the best people for the job on your fund, or are you choosing service providers simply because you're influenced and you have relationships that have impact that? I think that's what you're talking about, Omar.
No.
How do audit committees, how would an audit committee, how do we overcome that? How do we make sure that we have service providers simply because they are the best service providers we need?
No, we have various committees. We've got a governance committee, and we've got an investment committee, and we've got a board, and various other committees. And if we are tendering, we make sure that there's a proper tender process, that tender goes out, if it's a closed tender or open tender, and that we have proper interview, and there's a clear process how we appoint, and we get to appoint those trustees. How do we recommend to the board? The board then look at our process, look at how we evaluated those managers or service providers, and then will agree to appoint or not. Today, we never had independent trustees on our board, but we have 2 independent trustees, which also helps. And on our audit and risk committee, we have the majority of independent persons with skill that sits on the audit and risk committee. Okay. So there's also oversight from that side.
Okay, fantastic. I'm going to pick up.
But that doesn't mean to say that conflict still comes. Yeah. It still prolongs the meetings. It's still 20 meetings instead of 5 meetings.
Okay, so it's an issue, and we still have to manage it. I'm going to come to Mark now and say, if you can tell us what your challenges have been as a principal officer on funds.
Well, first of all, thank you very much for the invite. I think the principal officer, or the principal executive officer, as I would prefer to call it, is, I think, a highly underestimated job. I think we are kind of jack of all trades in that we have to deal with, in any one given day, a range of different issues and dealing with different stakeholders and different role players. And I think that's what I find the biggest challenge is really managing the role players. You've got trustees on the one end, invariably many of those trustees are aligned to unions, and therefore you deal with the union issues on the one side. You have the employer, they have their expectations, and you need to deal with the employer and the payroll and HR and the executive as well. And then obviously there's, as I alluded to the, the various people that are providing services to the fund, your administration and all, and asset managers and your investment consultants and actuaries and et cetera. And then obviously there's the attending all the different meetings, the audit committee meetings, the investment meetings, etc. So you're constantly on the go, and there's different issues, and then obviously dealing with the members directly as well, and their issues ranging from death benefits to withdrawal benefits and retirement benefits, and money running about the fact that the returns are negative and things like that. And So you never know in any one day what you're actually going to be doing, because you go in, think you're going to do A, B, and C, but you'll end up doing X, Y, and Z instead. And you have to be able to adapt and be flexible in your workday and your approach to manage all those curveballs in any one day, because that's what it is. It's constantly curveballs coming at you at the end of the day. And this is where I find the audit committee of all the committees is the most useful tool, and I use the word tool because in order to be able to manage your day and to be able to manage the risk that the fund has, one needs to rely on the audit committee or the audit and risk committee and make sure that you have a properly constituted audit committee with proper charter, with a proper set of deliverables in terms of what they need to manage and to oversee, etc. So, there's a heavy reliance on the audit committee. For me, that's, as I said, all the committees was the most critical because we were able to manage the risk. But if you're managing your risk on a constant basis, then you'll end up having a clean audit and you won't have any issues because you are able to constantly keep abreast of what those risks are and make sure that they are mitigated and dealt with in an appropriate manner. But I think the other important thing is that you've got to have a good working relationship with all that you come across be it in the meetings, be it with the service providers. At the end of the day, that working relationship, in order to make everything work, is, I think, you've got to be firm, you've got to be frank. And in fact, I'm sure there are some service providers that will tell you that have dealt with me in the past that are maybe a little bit too frank with them. But at the end of the day, despite being frank with them, we work and say we have, both them and myself, have a goal or on a purpose, and that is to serve the members at the end of the day. And so if they understand that's what their purpose is, then we're fine. But I think you should really manage your risk at the end of the day, and that's key.
I want to pick up on the point of where you're talking about managing many different service providers, because by implication it also means that you have to have many different skills to be able to engage with the different service providers. You have to be able to ask the actuary the right questions. You have to be able to look at that administration report and see the risks in admin. You have to be an admin specialist, and you have to be able to talk to a CA, all sorts of stakeholders. And it brings me to a question that I've had from the audience around what sort of skills base do you need, and is there a place where principal officers are being trained, or how are people being appointed on boards as principal officers, because the complexity is actually increasing?
Yeah, I would look. I think we are a strange breed. I think we're not necessarily normal people, but you have to. I think it's just about constant learning and self-development. Yes, there is what was the POA, now Patseta, and obviously other organizations, etc. But I think at the end of the day, if I look at myself, it was really my own self-development and self-learning and making sure that you understand what it actually is saying, because they are breed of their own, and then you've got a fund lawyer, there's another breed, and then you have a fund accountant, there's another breed, and then you have an asset manager and an asset consultant, there's another breed. So you're dealing with a very strange group of people, from one end to the other, and they all talk different languages, and they might be talking English, but it's a different English to all of them. It's really, I think, partly your personality, partly the willingness to engage, but it's really, at the end of the day, it's about your self-development, that make it your business to understand these people, because it is, a wide range of different people that you have to deal with and different skill sets. So it's to say that you're just a lawyer and you'll be okay, I don't think that's necessarily the right answer. To be an admin person, not necessarily the right person. I think you just, at the end of the day, you have to have a multiple range of skills to be able to actually cope at the end of the day and bring it all together.
Oma, what's your view? What makes for a good principal officer?
Keep everything simple. Investments is not difficult. And running and looking after workers' monies is not difficult. It's the easiest thing. Believe me, it's the easiest thing. Get the money, you invest the money, you get a return, you pay the person because that's what he wants. Make sure it's so easy. It's all the complexity that comes in between that makes it difficult.
And who makes the complexity?
It is. It's basic.
Everybody's answering for you, service providers.
The reason why I'm saying it's simple. It is simple because that's what it is. But in reality, it's not so simple. Because now, for people to make money, everybody in the industry phones you. Everybody, these workers save the money. You know, the workers are so poor that because they are forced to belong to our fund. It's not voluntary. They are forced. If they could do it voluntary, I think they will all resign. They won't contribute to our fund. They contribute their 100 rands to our fund. Everybody who's a service provider wants a piece of that 100 rand. What is that poor worker going to go home with? If you look at the challenges we have, the act is being changed. The legislation is changing. We have the CRISA, we have the ESG, we have all those things. Every little thing, there's an industry developing around ESG. We must start paying. CRISA, I don't want to go to New York. I'm not going to New York. Why must I go to New York and spend this workers' money? I won't go to a conference there on UNISA, on CRISA or the PRI. Because I just think it's just more and more challenges and more cost for the poor workers. So
the big issue that you keep raising is around costs. I think there are two comments that have come from the floor in terms of costs. One is costs, and one is the issue that you keep coming back to, which is on conflicts of interest. So the one is, do you think the regulator, the FSB, is doing enough to stop trustees, including principal officers, getting gifts which could potentially influence them in terms of their decision making? So decisions are made based on those relationships as opposed to what is in the interest of funds. And then the other thing that people are challenging a little bit on is that as much as you are saying the conferences are sometimes dominated by service providers, but still that there's still value in the information that people find that the conferences of this nature are educational. Unless, of course, you're saying that there could be some improvements, and then the question is, what sort of improvements would you like to see?
My view about conferences is that if you budget appropriately and you budget your fund and you make sure that there's a specific allocation for training development of trustees, which is highly essential, as well as the principal officer. Look, at the end of the day, our purpose is to make sure that there are maximum, maximum savings from the contributions received, and that all expenses are kept to, as low as possible, but not to compromise quality. But no, I think it's, and my experience is that there are not many funds that are actually doing a budgeting exercise properly. You can accommodate going to conferences, not necessarily all the way to New York. I would agree, I wouldn't go to New York either, unless it's sort of going to really be beneficial. But at the end of the day, one must make sure that there is continuous learning, and make sure that when you go to a conference that you're actually going to a conference with that is, going to actually make sure that the person goes out of the door with some new knowledge, and one constantly learning all the time. So, but it's about budgeting appropriately as part of your annual exercise and making sure that there is an allocation to attend such things. But I think the issue is that we've got to continue to learn. We can't be ignorant, and we need to obviously continue to learn.
Okay, Omar, I see you wanted to.
I agree with Mark. Trustees must learn all the time. All the time. Even if you learn the same thing all the time, it doesn't matter. Because trustees never sit in a meeting every day. They come to meetings every 3 months, every 2 months. And so they have to sometimes repeat the stuff so that they can. For me, trustees is a forum where each one brings skills to that meeting. And it's not one trustee that knows everything. We've got a big board of trustees. So you'll find one trustee that he will like law, or he will like legislation, the other one would like investments, the other one would like governance. And so we put them in this various subcommittees. We've got governance subcommittees, we have actuarial subcommittees, we have benefit subcommittees, we have communication subcommittees, we have risk and audit subcommittees. All these trustees sit in these tables, so they've got the interest. So they come to a board and each one comes with strength. And our training budget is about 1.2 million a year. So we train ourselves, our trustees, to understand what they must do so they can be better trustees. When they go to these conferences, especially the PATSITA conference, the IRF conference, so-called trustees conferences, then you expect trustees to participate more in those conferences, but it doesn't happen. For example, say with PATSITA, and I told the PATSITA director already about it. For example, it would be nice if they take the 6 biggest funds, or the 5 biggest funds, or the 3 biggest funds, and have a discussion on what committee? Investment committee, actuarial committee, risk and compliance committee, and put them up front and let them talk. Expose them. Yes, they're going to be exposed. My trust is going to be exposed, I know. They might come second last or last, they will be bad, but at least they will learn directly what other trustees are doing. They will go back to the committee and implement the good things. Okay. But they don't do that.
I think I'm hearing what you're saying. So I don't think you're saying necessarily that conferences are bad, and I think we do get good expertise from service providers, but I think you're saying that the voices of trustees have to be louder. They have to take the center stage. That's what you're saying, and you're not seeing enough of that, so that's where the improvement that you're looking for.
I think the concern that I have is not necessarily while we're sitting in the room. That's not the problem. The problem is outside the room. It's the misuse of fund money on insisting on going on business class air flights, insisting on 5-star hotels, insisting on all the abuse and there's the abuse of being here. That's the problem. Because who pays for the accommodation? Who pays for the airfares? Who pays for all the extras? For the shivas and the cigars and the etc. That's where the problem lies. And that's where the issue about going to conferences becomes a bugbear in my life. Is because I, as the principal officer, I'm the one that has to sign off the expense, the expenses that have been incurred. That's where the problem lies. Not while we're in the room. Yes, we have to pay a lot of money to come here, but that's fine. We budget for that. But the abuse is outside. It's all the soft issues. You know, you go to Cape Town, and then suddenly you get, 40, 50 telephone calls from the room in one evening. And then when you check what those telephone calls are, start becoming a problem. And then you get the room bill, and then there's shivas and all that type of thing, and there's cigars and things like that. There's a hotel in Cape Town that has a porn channel. You pay $80. And that came in one of my trustees. So I said, in the trustee meeting, I said, please, the new financial statements require that we disclose trustee expenses. Now, please, can you explain to me how I must disclose this particular expense? No, sorry, we didn't understand, and what have you, we must just put that as miscellaneous, blah, blah, blah. The problem is that they had spent the money on Cuban cigars and on the porn channel and fund expense.
But surely
that is the problem.
Yeah, but so this is my question to you as the CEOs basically of our funds, that there is rules in terms of conduct of trustees. So it says to me either there are no rules or the trustees don't understand the rules of conduct, or they're not adhering to them. So something I'll give Omar and then I'll come back to you, Mark. Yeah.
No, all I want to say, I don't have the problem that he has about telephone calls and phone and whatever. We don't have it. I must honestly, we don't. So we don't have it. But the issue that was raised earlier by a gentleman here was speaking, he was saying, maybe we must go the route of a professional trustee or what. And my argument against that is, what is a professional trustee? Isn't the Act saying the professional trustees are trustees? There's nothing in the Act that says a professional trustee and a normal trustee. Why do, every time I go to a conference, I hear people saying professional trustees? What's the difference between a professional trustee and a normal trustee? And I don't see the difference, unless it's a white and a black trustee. And I hope it's not, you know? I think trustees are all the same. Doesn't matter who they are. Some people have skills. Even if the professional trustee is a lawyer, he sits on our board, he will still tell me, I must get a legal opinion. He's not going to go give me a legal opinion. He's going to go put out his head. Even if you put a trustee in charge as a principal officer and he's a lawyer and he must get he must get a legal opinion. He's not going to give it. He's going to go out to a law firm and get you a legal opinion. So whatever you get a professional trustee or normal trustee, their responsible is exactly the same. I don't see the difference between the two. And when I say my biggest problem is service providers, it's a business model. It's a profit motive. You know, for them to do business, I don't have a problem. It's how they do business and how they use usually, as good we're talking about as trustees, these are poor trustees. They come from backgrounds that you won't even believe they come from. And I think that service providers just take advantage of them. So some of them, they become a trustee the first time, I train them and nice, the guy is really good. And then the first time he goes to a hotel, I say, come with me, you're staying in this hotel? No, I'm staying at that hotel. Why? He's going with the service provider. I'm not paying for this thing. The service providers are paying for the thing. Or they take him something. So the trustees are poor, and they are poor when they're being abused. So they doubly poor, I think.
Okay. I am going to allow questions from the floor. So if you have something burning, I'm going to ask you to lift your hand. So I'll take questions from the floor as well.
Before I just wanted to go through the challenges we're facing as principal officers.
Yeah.
This is just one of them. There are many. The FSB, we're looking at collections of our contributions, fit and profit trustees. We're looking at preservation, annuities that's coming. We're looking at treating our customers fairly. That one is coming and that one is a big one. And I don't know if we are treating our members fairly. I spoke, I'm not going to speak about this thing about everything else. And then there's the ESG stuff and CRISA and the infrastructure investment. And skilling of trustees. Trustees need more skills because the issues are becoming more complex and so forth. And I can go on and on and on about the economy contracting. And trustees have to be now, when the economy is doing well and the stock market is doing well and there's no cheap money in the market, and it's easy. But now, trustees must apply their mind to know, is the stock market expensive or not? Must I take the money offshore? Must I take to Africa? You know, we were told how Africa was so good investment, and I think we're still good. I'm still going to invest in Africa. That's not a problem. The problem is they came and they paved a road of gold to Africa. This is the performance. And I'll tell you, it's the truth I'm telling you now. And then this one asset manager, we appointed them, and they did very well. They did about 40% return. And then I went to them and I said, look, the trustee says your fees is too high. We can't pay this fees. He says to me, look at your return. It's 40%, and we're selecting these managers, and you know all the skill we have to get them. Next time he reports last week, and he came back, and the 40% is gone. And I asked him, where is the return? Gone to his reports. Doesn't get to the point. I asked him, look, where is the 40% gone to? Because it's now 10%. He says you must lower your expectations because markets are bad. It's going 10%. I said, but your fees are still the same. You were so arrogant the last time, and now, and then when you look at what he's investing in, it's not because I'm against alcohol, it's mostly alcohol companies, alcohol in Nigeria, alcohol in this country, alcohol in this country. Do you know? That's what makes sure to give you a performance. Do you know? I
think we'll come back to the ESG issues.
They paint you one picture, and what they deliver is something else.
Can I give Mark an opportunity? You had a burning point that you wanted to make, Mark.
What I always wanted to say was, I think in my particular scenario, when I was at Anglo Platinum, the decision of the board, and specifically from the chairman, was that I'm the face of the fund. I'm the spokesperson of the fund. And therefore, my conduct was that I had to show trust and faith to the membership. So the members, wherever I worked, there was, as I said, there's 50,000 members there. but all of them knew who I was. I didn't know all 50,000 people, but I think the issue is that when you are put in a position of trust and people, you expect the members to have faith in you, your conduct as the principal officer, this jack of all trades, in any one day doing all these different tasks, is that you have to conduct yourself in a specific manner, and that is in a professional manner and a courteous manner, and so that you are constantly in the limelight. You know, and I think that is, you know, one of the challenges is that not just do you need to have all the skills in order to deliver at the end of the day, is that people must be able to trust you at the end of the day, because, you know, as I say, my particular, that's not necessarily the case in all the other funds, but in our particular fund, it was a decision, you're the face of the fund, you're the spokesperson of the fund, and you will get the message out there. So when there are feedback sessions, I was at the mines, I was talking to the members, etc. constantly, and I think that position of trust is a huge burden on one, you know, that you have to conduct yourself in this particular sort of upright manner, sort of, so to speak. Okay. And that's a particular soft skill that you don't just get out of from going to any university or course or anything like that. That's a thing that comes from within yourself.
But it's more than it has to be.
You know, one mustn't underestimate that particular aspect of the job.
But I think trust also goes with ethics, right? And I think it's about inculcating a culture of ethics throughout the operation of the fund, from the principal officer to the board of trustees. I think that culture is very important.
The other point I wanted to raise is that, you know, coming back to the theme of the conference and, you know, the audit committee, etc. And I think coming back, as I said, you know, as I said just now, that for me, of all the committees, the audit committee was the most critical for me, and because there it is where you actually go in, and depending on your charter and how you laid out your charter, but in our particular case, you know, it wasn't just about looking at the annual financial statements once a year. It's about actually interrogating the internal audit function of your service providers and actually challenging that internal audit function and making sure that, you know, all the checks and balances and the procedures are in place, that the internal audit committee is actually functioning, trying to get out, not necessarily with success, but the issues you push for it, and to try and get the, you know, the internal audit reports of the particular service providers that you're dealing with, to make sure that everything is in place. And then, more importantly, the internal audit function of the employers that you're participating with, because at the end of the day, you know, we tend to forget that, you know, the payroll is passing over the contributions to the fund. We need to make sure that what's taking place on the payroll side, that the calculations are in fact correct, that the correct pension salaries are being used, that the correct contribution rates are applied, etc. And to get to make sure that what the employer is expected to do is actually be done properly. And you know, it's very difficult. You work within a company, but now you're challenging the internal audit function of that company to make sure that, you know, the HR and the payroll are doing things correctly. That's a very interesting discussion, and sometimes quite a heated discussion, because, you know, so how dare you question what, you know, your own company? I said, well, the audit charter requires us to make sure that we are able to sign off that everything is above board and everything is correct, and that the risks have been mitigated and removed. Now please give us the audit report. And you know, so I need to develop a relationship with the audit department, internal audit department. Now, in some companies, internal audit is now outsourced, and that becomes even more difficult, because then they say, oh, that's not part of our brief. But then you need to constantly challenge, and I think that's part of the role is, you know, the audit committee will tell you, you know, as they said, Mark, go and sort that out, go and make sure that it's done. Get your thing. So the audit committee is not going to necessarily go. Now, in our particular charter, the chairman of the audit committee, who was an external independent person, not aligned with the employer, not a trustee, but in terms of King 1, 2, and 3, was an independent person that had nothing to do with, and obviously skilled in audit, etc. But he and I would then go and visit, both the employer and the service providers, and to get the internal audit report, make sure that making sure that the theft and fraud and policies are in place, and making sure that there were no fraud that's taking place, within our fund at the administrators, I think. So I think, by removing those risks and managing those risks and making sure that they're green and not red. Even orange is not acceptable, but you want a green audit. And that to me was, I looked forward to, engaging, with the internal audit departments of the various key role players, because once those risks have been removed, all the other stuff like investments and what have you, that will go through it, because you've got a long-term strategy, that will all go, smoothly. But you need to manage the risk. And if you're not managing your key risk, then you're going to be swamped, and you're going to constantly have problems. You're going to have you're going to have adjudicated complaints. You're going to have, sort of qualified audits from the auditors. And then you've got to explain a whole lot of stuff. Why do you have audit, sort of any qualifications or even matters of concern? You don't want that. You want a clean audit. And so I think the audit charter is really key in terms of managing the fund at the end of the day, and making sure that the necessary, risks are being managed.
I think just to pick up on that before I go to Oma, so I don't know how many people here engage with the internal audit functions of the service providers. How many of us do that? I'm just interested on your audit committees and pension funds, because I know this is a new thing for us, is engaging with the internal audits of your service providers. I think it's a very good idea, because then you understand what the weaknesses of the organization are from an auditing perspective. But I think there's another issue. It's whether we as boards and helping you as principal officers ask the right questions. And I think that's where the professionalism comes from, or the education comes from. It's, are we asking our service providers the right questions? Because if we don't ask the right questions, we'll never understand what the risks are. Uma.
Look, I agree with the clerk and many of the things he said. I'm not going to repeat what he said, but I think it's important that we have audit and risk committees. The question is, each fund will be different. It won't be the same. We've got a huge fund, so we've got 10,000, 9,000 employers. So it's difficult to go to companies. We do go to companies. If you see a fraction of the companies, it's like huge. But then we've got a separate marketing department that does that. We've a completely different department that does that. I think the most critical committees for me in our fund is the benefits and the actuarial committee, governance committee, and the investment committee. Critical for me, because they add real value to the fund and the members. But coming to the audit and risk committee, our charter said that the audit and that committee, the independent members will be the majority. That's the first thing. So we have 3 independent members. Those 3 independent members will be competent, skilled people that did audit. The key here is to get people that you trust and you know they can do the work and that won't collude. Don't think if people are skilled and they're clever and they got to varsity, they won't collude. They will collude if they can make money. So if the advantage of this thing, if these guys work together, the board of trustees can sit back and say, look here, we've got 3 professional guys. Look at all these things. Look at our risk. We can sit back. If we have a problem, we can send it there. These guys can look at it and come with answers to our problems. The other thing is why we have these 3 independent people there, and they must be independent. If they're not independent, we're going to have serious problems. They set targets to the auditors. Auditors must finish this audit in a certain time and a certain amount of money, and they can't, no overruns and so on. Because they know exactly what the auditors must do. You know? Because if you don't do that, there's research done that most of the auditors, the fees they charge you, the overruns and the extra work is much more than the fees they charge you to do the audit when they came the first time. So what we do as a committee, we make sure that the auditors meet what they must do. If there's any overruns, must go to the chairman and myself. If it doesn't, we don't pay. We won't pay 1 hour if they have not gone to the chairman to say they're going on the overrun. They must stop, they must explain why, and they must do the work, and they must tell us how many hours they're going to do that work for. So I think there must be oversight from the chairman to make sure that we manage the hours so that there's no unnecessary expenditure. But if there is, then the work must be done. If there's extra work on IT or if there's investigation on corruption or fraud, they must do the work. They must come and tell us and we'll do the work. But they can't do endless investigation and analytical reports and work. It'll be, the audit will get to over 2-3 million rand if you allow them to do that. So yes, we must have it. There must be. We have independent people that sit on there. There are 2 trustees that join them, but the 3 independent people got the most say in that meeting.
Can I just ask the audience this question? Because sometimes on some pension funds, the balance between the principal officer as an executor of decision making and the principal officer as a decision maker, sometimes there is there's no clear delineation, and you find actually that in many ways the principal officer is actually making decisions on behalf of the board, and all the board is doing is going according to what the principal officer really wants to happen. Do you think we've got the balance right?
So, sorry, I'm sorry, I don't make any decisions. I don't make one decision.
That's what
yes, I do participate and I do advise, but I don't make any decisions.
Yeah. Now, I understand that, but actually, in some ways, sometimes they do. They may not say yes, but in the way things are presented to the Board of Trustees, actually all you're doing is endorsing what your principal officer is saying. Sometimes, I'm just saying, and sometimes it really is about the difference in knowledge between the Board of Trustees and the principal officer. So my question is, and by show of hands, do you think, if you think we've got the balance right generally, just put your hand up. Okay. That's very, a bit thin, but thank you for that. But I'm just saying sometimes there is, and I just wanted to hear from this.
I think the issue is, is the mandate of the principal officer clear? And has the mandate been explicitly understood by by the decision makers, being i.e. the trustees, but also the employer as well, because you're obviously working with the employer as well. And I think within that mandate, at the end of the day, certain things have to be decided, and you have to manage it, and you have to make a decision. Just signing off an expense for attending a conference, you have to make a decision. Do I or do I not accept this expense? You have to make a decision. What's my mandate is, does it fit within the budget? Does it fit within the expense policy and the code of conduct, etc.? Hence why I asked the question, how do I've got an invoice here, I'm expected to sign off for something, I cannot make a decision because it contravenes the expense policy. Now please trustees, give me the answer. But you have to make certain decisions. So decisions are being made, but it's within a mandate. And has that mandate been understood? I think the first mandate is that we are bound by the Pension Funds Act and other related acts. So we don't necessarily have discretion. We have to operate within whatever that mandate is, be it the Income Tax Act, be it the Pension Funds Act, or whatever it is that we're operating, the rules of the fund, the various charters, the various committee mandates, etc. All of them will have a role that the principal officer has to perform, and you have to make decisions within that. Okay. And if you overstep the mandate, then yes, then there's a problem.
And it's an influence thing. It's influence.
But also, I think the issue is that, yes, because, and I think, my own experience, because I am in a position of knowledge and a position of understanding, I'm also seen as an advisor as well. So therefore, the trustees would ask for an opinion. I will give a frank answer. And I'll say, I think this is the route that you should follow, given this reason, this reason, this reason. But as long as those reasons are within the ambit of the, for example, the investment policy statement or whatever it is that you are working with, then obviously that advice will be. So yes, you do influence, because you're obviously in that position of understanding. Also, because you're dealing with a jack of all trades position, work, you are, you in a privileged position that if you make a decision like this, the consequence or downstream consequence of that decision of potentially something else further down the food chain. The implication maybe is a beneficiary trust fund or something like that, but suddenly there's a consequence there. But you're in a position, because of your knowledge, understand that consequence. You have to then influence and say, if you make that decision, please understand that this is the possible outcome. You can make that decision, but just understand that it might blow up in your face in 2 years' time.
Okay.
And don't come back to me and cry when it does blow up,
okay,
because you were warned.
So the other question that I have from the audience is issues around ESG, and how we deal with ESG within our funds from a principal officer's perspective. Do we take responsibility enough as funds on ESG and ensuring that, or is there an issue around the short-term needs and because ESG really is around sustainability. So are we taking the right responsibility?
Look, in my particular case, I think the issue was that, once again, based on a mandate with the investment consultants, and the thing is you engage with your asset managers, making sure that their mandates, and if need be to reissue a new mandate policy contract, that ESG is incorporated into the way they manage. I think the issue of the ESG is that in most of our investments we have delegated and outsourced the responsibility of appointing buying particular shares to the asset manager. The trustees don't choose whether it's SA Breweries versus BAT or Sasol or MTN. That's the asset manager's job. So therefore we expect the asset manager to perform in a particular manner in asking those questions and making sure that they pick stocks that are ESG compliant. I think our role is to make sure that the mandates that we give to the asset managers incorporate ESG, that when the managers report back, that a sizable component, instead of talking sort of over our heads about the economy this and the economy that and etc., that as a consultants can do, and I think, but focus on a good portion of the feedback on what have they done with ESG, how much engagement have they done, to what has been their proxy voting records, etc., and so to make sure that they account according to the mandate that we've given them. So I think it's that engagement that are the managers doing what they were supposed to be doing? Mm-hmm. If they are, then at least then you are thinking. Our trustees are not going to get into ESG, into nitty-gritty. They're not going to go into the engagement with the companies, etc., because we don't have the skills all the time because we've got other work to do. We have a full-time job. But if the managers know what they need to do and that they are being held accountable, then at least then we're a long way down the thing. I think the issue that I do have a concern with ESG, especially for the smaller funds, many of the smaller funds are in pooled portfolios, and therefore the distance of having influence on ESG becomes watered down. In fact, in many cases, nil. But where you have a segregated portfolio, and in the name of the fund, you can then hold the asset manager a lot more accountable in making sure that he or she carries out the mandate that they were given to do. Mm.
And I want to hear your view, Oma, again on ESG and how it fits into the whole drive. And we had it also at the Batseta conference around shareholder activism. So now we need to be more active in terms of how we're investing within companies. Oma, what is your view?
First of all, not my view. Our fund's view is exactly the same like Mark's view. Is that we don't have the governance budget to manage ourselves. We leave it to the managers, and we get reports from the managers. So it's similar to theirs.
But the difference is
my view is this. If you interview managers, any manager, go to Alan Gray, Coronation, or any of those, and you sit down and you want to appoint them, they will exactly tell you when they select a stock, they will make sure that the governance issues are addressed, all those social issues are addressed, then why are we going to pay for this ESG still more? So I don't understand, I'm talking a personal view myself now, that isn't this what the asset manager in any case should have been doing? From day one. I went to managers myself to go see, to appoint them. They told me they do the stuff in the beginning. And suddenly ESG came and now it's like an extra cost on top of it. The second thing is this, when you get to BEE still, and it becomes a problem for me to an extent where a share must be diluted. These poor workers, like I told you, can't feed their children. Can't they send their children to school? Don't have shoes in this cold weather to send their children to school. They go barefoot to school. They are forced to save their money here. They then must take their money to reconstruct this country. How can that be fair? They must give a guy who stays in Houghton and Bishop's Court and he's a bit black, and now he comes to me and he says, look here, I'm an asset manager, I'm entitled, you must give me money. But where stays and where this worker stays must do differently, and then must dilute the shares in the market to give these guys BE. I think there's something wrong. I think 20 years down the line we must think about this thing. I'm telling you, that's my personal view. I will debate this with the trustees in my fund, but my personal view is that I can't see why these workers must pay for the shares. And why was these workers? Why must a worker who can't feed his child, who can't send his child to school, reconstruct his country? Why can't we just put a tax on our rich people?
I think the dilemma also just coming to the ESG issue, and I think my work through CRESA, I'm on the board of CRESA, and one of the things that I'm becoming a lot more sort of aware of is that your top 5 or 6 asset managers will have the resources internally to be able to do their own analyst work and to engage with the various companies and to interrogate the companies on the ESG factors on our behalf. But the majority of your smaller managers are actually buying the research from analysts and from broker houses. So they're not doing the actual engagement themselves. And I think that's the challenge, is that a smaller asset manager will buy a report from a broker or an analyst, and they will make a decision based on the report that they've been given, because they will not, as I say, very, very few of the smaller managers will actually do the engagement themselves because they don't have the resources or the capabilities. And so I think there is a big differentiation between your larger managers that have the internal capabilities, that can send through people to go, versus the smaller managers. And I think it's part of the challenge of the smaller managers is, maybe they need to look at other ways of, other than just buying a report. Maybe they need to put the egos aside and work on a collective and say, fine, okay, let's have a collective team to go and do engagement with large corporates on the stock exchange, etc., to be able to first-hand ask the right questions and not rely on other people's questions and other people's interpretations of the answers. And I think that is a challenge with the ESG, is that the engagement factor is not as what we would like it to be, in my view.
Okay, so I have a comment from the floor that we are completely off topic, but I'd like to contextualize things a little bit differently, in the sense that, so they're saying, so the question was, what were the challenges that you as principal officers face, and how can audit committees help you? But I just would like to say that at the end of the day, your role is to help boards of management of pension funds to implement Regulation 28, right? And part of the implementation of Regulation 28 is issues around ESG, is SRI, is BE consideration, et cetera, et cetera, et cetera. So all of those issues are important in terms of your operations as principal officers. I would be surprised, and Omar, let me just say this. So I'm thinking about what you're saying. I'm also thinking about what the minister said earlier this morning. The minister spoke about the pools of funds as not just important from a retirement funds point of view, but also important from enabling the economy to expand, in that there's pools of funds that can help in terms of economic growth and how you invest. Okay, when I look at some of my members, and they come from poor communities, I've seen in some instances where we've done investments in those communities, SRI investments, and the impact that they've had. Those people, when they retire, they'll have to go back to so is that a clear-cut line? That's the first. And secondly, I would also be surprised if you're paying more to be invested in a BE manager, for example. Surely, the fees are the same. Are you saying the costs are more? That's what I'm trying to understand. And if that's the case, linking it to audit committees, how do audit committees come in to help you be able to fulfill all these multiple obligations that are coming at us as boards, and therefore you as people who execute? How can we do things efficiently? How do audit committees help?
First let me go. The thing, before Reg 28 spoke about SRI, we already invested in SRI in our fund. Our SRI policy is that we must invest in infrastructure, job creation, and housing. That's our policy. And if we find value in those areas that will give a return to our members, we will do that. But we're not going to do government's job by throwing money at something and not giving a return. You think we must do that? No. So, okay, that we agree. When it comes to BE, we think we've got a responsibility. 50% of our South African assets, 50%, is with black managers. 50%. You think I've done a job? Yes. So I can talk against this thing that they dilute our members' money in the stock exchange. So I agree with you on those things. The last one is, the minister must stop telling us what we must do. We must do what we must do. They must do what they must do. If they want us to invest in water, for example, we just invested, not now, we invested in solar power and wind power. A second, when we believed it was money in. Now we're not investing in that because we don't think we're going to make money. But the thing is that we did invest in that. And we thought it was a good return. But if the government really believes that there is an area that we must go invest in, we will do that. Why don't they guarantee? Why don't they take out a bond and tell us, take this bond, and this money will go towards that dam or that thing, so we know that our money is guaranteed. They can't tell us just to take workers' money and dump it in some way, and we can't see the return. Why don't they really look at projects that they believe that we must do, develop a bond for that thing, and then tell us to buy the bond, and that money is guaranteed. We've got pensioners that we must pay for till the next 50 years. So if that bond matures in 2 years' time, 5 years' time, it's fine. We sit in bonds that mature in 6 years, 7 years' time. We're a long-term investor. We can invest for 25, 35 years. So, but to say to us that because we got money, we must put the money in there because somebody wants to expand that area. I don't think we must do that unless, like we saw value in the wind and farm, it will put money in there.
Yeah, I think that's the point. The point is of course, I mean, our primary responsibilities is to members, and therefore the return objectives based on our investment strategy, that's our primary focus. But sometimes it's not either or. So in other words, you can invest in some government priorities and still get the returns you want. So I think that's...
And we'll do that.
Yeah. Just maybe we are running out of time, and I'd like to give you the last few words in terms of how you think we can make things better in terms of audit committee oversight effectiveness in helping you.
Yeah. I think from my side, I think the issue is make sure that the audit charter is comprehensive, that it deals with both external and internal audit of both service providers as well as the employer, and that it gives the mandate for the chairperson to be independent, and that the chairperson can, on behalf of the audit committee, engage with the internal audit functions of the various role players. And I just think that also, and I think what I was going to allude to about the investment committee and the risk, I think they're making sure that the investment committee understands the various risks that it is facing, that those risks are taken into account by the risk committee of the audit and risk committee, and that they are being managed. So I think at the end of the day, if you're managing those risks, I think the issue is like the point about that you alluded to about the returns and government thing. That I think the issue is it's a side point. I think we need to make sure we don't go to prescribed assets. I think if a minister or government or especially economic affairs department are alluding to that, I think that will be a disaster. We need to make sure that it remains voluntary. We do have various government bonds. I would suggest that there be more municipal bonds than the few that there are, so that we are able to invest in infrastructure at municipal level, because that's where the need is. And I really would urge National Treasury to work with the industry and let's make sure that there are more municipal bonds but at the end of the day, it's got to deliver a return and make sure that we're also not paying exorbitant costs, that this was in a reasonable fee, but making sure that returns at the end of the day. But I think coming back to the audit committee, everything hinges on the charter, and what comes out of the risk report and the audit report are managed consistently. And I think that's the key for me, is making sure that and then also understand that the principal officer is an official of the fund, and therefore he or she himself is also subject to audit and to check as well, and making sure that they are also acting in an ethical manner within the charter as well.
Okay. Thank you very much, Mark, for those comments. Omar, how do we make things better, and how can we use audit committees more efficiently?
I don't think I'm going to have much to say on that one, but I will tell you something. I'll finish off with it. The first thing I want to say is that to make our life easier as audit committees and funds, the regulator or somebody must look at the conflict of interest. For example, a consultant being an asset manager. For example, the same consultant works out your IPS, decide what you must have in terms of Reg 28. Then tomorrow he comes and he says, I'm tendering for that area. How did he draw that IPS up? Was there intention of him to add more to the area where he was? You see, there's a conflict already from the day one. So, and there's nothing we can do, because these people have got licenses from the FSB to operate in the industry, do you know? So what can we do if people are licensed to do their work? So for me, that's a huge challenge. And I hope that one day we sort that one out. It looks like an easy one. PF 130 says if there's a conflict, you must avoid it. But these guys don't avoid the conflict, they just stay in that conflict. On the Audit and Risk Committee, I think for me the biggest challenge for us is how effectively we use our internal audit. If our internal audit and the external audit can work together, because the external audit is a end of the year audit. As a year's gone by, and then you see what the problems are. Where the internal audit is on a day-to-day issue, we as an audit committee can tell them where they must go into, where the risks are, and make sure that they manage the risk on a daily basis or on a monthly basis. So the internal audit is very important. And if the external auditors can rely on the internal auditors, I think the audit will go quicker. They will work as a team. The internal audit must be completely independent, must be able to tell the external auditor where the problems are, so that we can finish the audit very quickly and manage our risk, not on a yearly basis, but at least on a monthly, quarterly basis.
Okay. Thank you so much for those views. I think we've gained a lot and understood some of the issues that you're dealing with, issues around conflicts of interest, issues around costs, issues around being assisted by trustees who know how to ask the right questions, and of course, issues around making sure that they're bringing the regulator on board in terms of monitoring some of the things, the challenges that we're dealing with. So thank you so much. And I think, Omar, contrary to what you think, what I'm getting is people are getting a lot of value from the educational aspect of all of this. So there's been a lot of value. So thank you so much. Okay.